$120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi Code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11 here on Monday, Marathon Monday in the Boston region. And we've got markets which had opened significantly positive today, now stuck in neutral with the Dow up 64 points, the S&P's up 6, the NASDAQ, though, down 1 point at the moment. We get the 10-year U.S. Treasury up 14 basis points to 4.64%. That means mortgage rates are going to be on the move to the upside once again. According to Mortgage News Daily, the national 30-year fixed-rate mortgage at 7.3% on Friday, probably going to be getting north of 7.4% today as a result of this move. We've got gold down $7.70 an ounce, and we've got oil down 82 cents a barrel. The AAA national average for gas prices remains elevated, up another 1.2 cents overnight to 3.63 and 4/10 of a cent. And that's what we've got moving in markets today.
Where's your psychological tipping point on gas prices? I really don't get there until I'm at $4 a gallon, personally. I know everybody has kind of a different threshold there.
Well,
maybe it's per tank that people think about it instead.
Here's the thing. I get all my gas at BJ's now. It was $3.11 over the weekend.
Nice.
So I'm not feeling the pain yet. For me, I start to get a little bit angsty around $3.50. And when I see a 4 in the first digit, I'm like, full Michael Scott, don't like that.
Yeah, that's where I am too. Like, I don't love gas prices being up here, although in Massachusetts it's still below $3.50 a gallon in most parts of the state, probably not in the Cape and Islands, but in a lot of parts of the state, still below $3.50 per gallon. And that really, I mean, look, I'd love for it to be $2 a gallon, but it doesn't really rub me the wrong way until I'm up over 4.
No, I mean, I think if you look at the data going back and say, gee, where has it been historically, even without adjusting for inflation, you've basically spent most of the last 15 years, going back to 2008, most of the last 15 years has been between $2.50 and $3.50 a gallon.
So it feels normal.
That's where it's landed.
Yeah.
You've had some brief periods where it's been above that. 2011, 2012, and parts of 2013, you got north of there for a little bit. From started 2015 through basically October of 2020, you never got above $3 a gallon. So you had, a decent period there where you were just hanging out around $2.50 to $2.75. And then the last few years, aside from, the one big spike, which did happen, you've been closer to $3.50 a gallon for most of the time. Otherwise. $2.50 to $3.50 a gallon is where you've generally been, though, during that time. I still remember, obviously, look, you go back to the 90s, and in the late 90s, I think it was 98 or 99, you actually had sub-dollar a gallon gas for a brief period back then.
Yeah.
But those days are not coming back. Let's talk a little bit about Apple. And Apple stock this year has been not good. And it's been not good because of concerns about their sales and whether or not they can continue to grow. So Apple stock down about 8% this year, while the S&P 500 is up 7 to 8%. Not 7 to 8, but 7 to 8.
Yes.
And I think when you look at this, it's a simple case of, hey, China is a major market and a major supplier for Apple. There are tensions between the United States and China that are potentially impacting both the willingness of Apple to produce all of its phones in China, which is the cheapest place for it to produce its phones, and the willingness of Chinese citizens to buy Apple products. And so I think they're facing a slump because of that more than anything else.
Yeah. Samsung, again, overtaking them in first quarter shipments, 60.1 million smartphones delivered versus Apple's 50.1. It is still absolutely the case that Apple's, not only are they the most profitable, are they still making all of the profit in the smartphone industry today?
I haven't seen the most recent quarters, but in basically the history of smartphones for the last 15, 17 years now, since 2007, Apple has been the only manufacturer that has made profits on the hardware sales of their smartphones.
The other piece of this that I don't think you're seeing an impact from today, but I think is starting to grow, in Europe especially, Apple has had to refine their product to comply with European laws. And unlike Facebook, which can, tailor their product depending on which country they're operating in, for Apple, that's a big pain, right? For Apple to build a different piece of hardware for every country in which they're going to sell it, it's a little bit more complicated. And so, these are minor items, but like the charging cord changing over to a universal cord and other features of their phones that are starting to change, right? There's a discussion of removing the way in which pictures and videos are sent between iPhone devices and non-iPhone devices so that they can be more easily viewable. These are potentially long-term problems for Apple in terms of their moat, the gatekeeping that has historically brought new people in and prevented people from leaving. The more they have to comply with these different European laws, the more challenging that becomes, I think.
When we look at the actual financials for Apple, just a few numbers that I think are informative about where they actually stand. Trailing 12-month revenue currently sits at $385 billion. So they're still making $1 billion a day in revenue, which is insane. It's also the same place that they've been since Q4 of 2021. So they've plateaued on their revenue in the last 3 years, 22, 23, and now, the first part of 24. They really haven't seen any revenue growth.
Have they rolled out any new
nothing meaningful over that time.
The
the
AI
Vision
goggle,
Pro, which it got talked about for a week. Have you heard anyone mention them in the last 3 months?
Zero.
It's just been silent. So revenue is flat. Operating margins are still very, very good. They're at 30.76 for the last 12 months. That is in line with where they've been for the last 15 years. So their margin, they're not cutting prices to sell more product. That's something that you could say is a good thing. Profit, net income, $100 billion. Again, also, if your margins are the same and your sales are the same, has plateaued in the last 2.5 years. Nothing crazy that you're seeing there. Free cash flow. Hey, what are you actually seeing? Don't worry about the profit calculations. What are you seeing on a free cash flow basis? Plateaued for the last 3 years. So this is a company that you don't look at it and say, hey, there's real problems. This company is going to be out of business soon. Like that's not it.
Yeah.
But it's not a company that is showing any growth impulse at the moment. And in fact, from China, you most likely have a slowdown that's coming there. And so I do think it's a valuable question. Hey, what do you do with this company going forward on a valuation basis? It's trading 27 times forward earnings for a company that's not growing sales. The counterpoint to that is if they're going to keep printing $100 billion in profit a year and doing these huge return of capital through combination of dividends and buybacks, how much do you discount the company from where it is? I'm not saying that it should never go down because that's dumb, but when you have a company this big and this profitable, what's the right amount for it to go down? And I don't have a good answer on that.
I'll also bring up, I don't know, historically over the last 15 years where the valuation has been on this company, but I will also say,
I can tell you.
Please, yeah, where's the range been?
So the forward PE ratio for, this doesn't give me why is this chart only showing the last 5 days? That's not
helpful.
That's not useful. I can tell you the last 5 years.
Sure, good starting point.
It has, over that time period, and this is dating back to 2021, so 4 years. Over that time period, the average forward PE has been 26.83. It's at 26.82 right now.
Okay. And so, if I think about beyond the last 5 years, the last 15 years, we have frequently, and analysts have frequently asked this question: what is going to be the next thing that brings earnings from Apple to a new higher level? Because it's not it's not just price hikes that they do. It's something that incentivizes people to go back to Apple and buy the next new thing, whether it's a new version of their phone or whether it's a different piece of hardware. Every time that question was asked over the last 20 plus years, it's been answered with a hot new product that sold into a new market that, frankly, most people didn't anticipate coming. And so that's the same question that I have today. And to some extent, you have to give Apple the benefit of the doubt on this, because every time you've doubted their ability to find that new product, that new sale, they've kind of done so over the last 20 years.
I got some other data going back to 2010. Not forward PE ratio, but I got price to sales and PE. So price to sales right now is at 7.1. If you look basically until pre-COVID, so call it 1/1/2020, the average price to sales ratio during that time was 3.47, so half of what it is today. Likewise, PE ratio, average during that same time, 2010 through 2020, was 15.74. If you look at where it stands today, it's 27.34. So there is a case, I'm not saying that this happens, but hey, if Apple reverts to its pre-COVID valuations, just on a multiple basis, you got 30 to 40% downside there.
To be clear, you can say that about almost every company in the S&P 500 right now, too.
Except Macy's.
Yeah.
And probably some others.
Sure.
But absent those, weird ones, they're probably all trading more expensively, because the S&P as a whole is trading 20.9 times forward earnings right now, and the 10-year average is around 17.7.
Sure.
Let's take a quick break. When we come back, we've got trivia, and we'll talk a little bit about what retirement looks like with less than $1 million saved, or most retirements in America.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right? You can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night. Because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. Right now, the oldest annually run marathon in the world is underway as runners race from Hopkinton to Boston. But during the 1980 running of the marathon, a woman dominated the competition, finishing with a time of 2 hours and 31 minutes, which at the time was the fastest a woman had ever run the race. Eventually, race officials realized she cheated by leaving the course and rejoining just before the finish line. Today's question is, what was the name of the woman who cheated the marathon in 1980? What was the name of the woman who cheated the marathon in 1980? Be the second person to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text. We'll give away the Applebee's gift card on Friday's show. That's 617-362-1385, and the second correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
I like that. If you're going to cheat, then the least you deserve is for your name to not be forgotten over nearly half a century.
I think it's also just fascinating that the list of sports in which you can do this,
remarkably thin.
It's pretty much like this, Iron Man. I'm trying to think of what else you could try to pull this off in, but it has to be something where the course is, the field or whatever the course is so big that you can't possibly police the whole thing.
Yeah. There's this
like that weird car race that's all takes place all over northern Africa.
Oh, Dakar?
Is that what it's called?
Yeah.
Yeah.
There's a weird race down it's down south somewhere. We were talking about it I think recently, but it's an ultra marathon. I think it's 100 plus miles, and the guy who runs the race, what he'll do is hide a bunch of random books that he keeps track of around the course, and that's his way of checking that you've actually completed. Is you have to bring a page from each of the books back to him in order to prove out that you've done it.
Oh, that's good.
He forbids GPS. Part of the race is also figuring out where you're supposed to be going, and that's a good method, I thought, of preventing cheating.
Because you can't do this in the 100-yard dash.
No, they can
everyone's
see
watching. You can't even. You probably can't even do this in the Boston Marathon anymore because of how much
the
media.
Now.
Everyone. The trackers obviously, but everyone is watching.
Yeah.
Like you. I don't think you could just sneak onto the course at this point.
Well, you can. You're just not going to be misconstrued as winning.
Yes, exactly. No one's going to expect that you're the actual winner, especially when you look like that.
Yeah.
Let's talk about retirement in America. There's a nice tone-deaf title from the Wall Street Journal here titled, "Here's what retirement with less than $1 million looks like in America." The people who wrote the article didn't write the title, I'm sure, but it comes off kind of like the Bloomberg piece, hey, if you want to save money during inflation, don't treat your dog for any illnesses.
Yeah. Most Americans don't have $1 million saved
Correct.
for retirement. Let's be clear about that. In fact, total household balances in retirement accounts, which, this is not all family wealth, but those with retirement accounts for those aged 55 to 64 had an average of $413,814 based on 2019 data. That might be a bit higher today, but remember that's average,
not
too,
median.
which is going to be dragged way up by big account balances. So, I would discount that. Median to me would be a much more interesting statistic on all of this. But what does it look like? Well, it looks like a retirement on a 5-figure income. I think to start with, it looks like a retirement where a good chunk of income is being provided by Social Security in most cases. And it is not extravagant, but in a lot of cases it sounds quite pleasant.
Well, and in most cases, it's pretty similar to the lifestyle that families were living prior to their retirement. Because remember, in America, most people are not making $150,000 a year. That's just not the case. So they've got some examples where they have a couple that has about $400,000 in savings and investments. They have annual spending of around $50,000 because the bulk of their income, about half of it, ends up coming from Social Security and things along those lines. But it talks about, hey, especially when you have, account balances that are, when you're going to have account balances that are smaller, a move in the market feels pretty significant to you in a way that it doesn't if you have, $3 million. Yes, you might not lose as much in dollar terms, but in percentage terms, it feels worse because you're kind of closer to that edge to begin with.
Yeah, well, and the Wall Street Journal piece managed to find a couple, which is, heart-wrenching to most investment advisors out there where, they got spooked by 2008, moved all into stable value, and then never recovered their losses from 2008, at which, certainly these folks are not alone in that. But, the answer is there's no magic number, right? You adapt your lifestyle to what you have in most cases, and it doesn't mean that you can't have an enjoyable retirement on less than $1 million.
No.
I think that's, maybe in New England that seems like a false premise to some people, but that's definitely the case even here in New England.
I've seen people with millions of dollars who can't figure out how to pay their bills. I've seen people with almost nothing that get all their bills.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
What was the name of the woman who cheated the marathon in 1980? That would be Rosie Ruiz. Rosie Ruiz became a marathon legend when she finished the Boston Marathon with a record time in 1980. Race officials eventually compiled evidence to prove she cheated and retroactively disqualified her from the race. It turns out, and I did not know this part, Ruiz cheated the year before in the New York Marathon to qualify for the Boston Marathon. Had no idea that actually happened. Today's winner is Janice from Marshfield. Janice has won a Financial Exchange Show t-shirt and is also registered to win a $100 gift card to Applebee's. We'll be giving away the gift card on Friday's show. Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. Because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited. Dine in only.
Let's talk a little bit about electric vehicles. There's a piece from CNBC, why Hawaii is becoming a leader in U.S. EV adoption.
Because gas costs nearly $5 a gallon.
I would imagine that has to be the main driving force, Michael?
I mean, seems like it to me. There are other logical reasons as well. I would imagine that your highway driving time in Hawaii is a little bit less on average than, say, the Midwest, because you live on a bunch of islands. Also, actually, I have an important question.
Yeah.
Did you know that they have interstates in Hawaii? And I don't know what that means.
I did know, but I've wondered the same thing. Because it's not actually an interstate highway. It doesn't connect to California.
Yeah, it's right in the word. So I was a bit confused about that when we were visiting on family vacation back in February. I was like, how exactly is this supposed to be an interstate? But beyond that, why would this be so high? Well, yeah, I mean, look, in comparison to gas-powered vehicles, you are driving less highway time where gas-powered vehicles are more efficient, and you are in a state which, is always within the top 5 or 10% of gas prices nationwide. So I would think that EV adoption makes sense. Oh, also, not many better places to be able to install solar as an option to charge your electric vehicle. So that probably has something to do with it. I'm sure politics does too, to an extent, but I think it's mainly the first economic one.
The term comes from the fact that they're part of the Dwight D. Eisenhower interstate highway system, not that they themselves are interstate, but they were funded as part of the interstate system.
That's confusing. I was able to pretty easily conclude that this highway probably doesn't connect to another state, but, there's somebody out there who's wondering where the tunnel goes.
Right, like, how do I get back to California? And are there gas stations under the ocean? Because it's a long way.
Long ways to go.
What is it, 2,500 miles off the coast of California?
I couldn't tell you.
Or maybe it goes the other way around the earth and comes back in Florida.
Somehow, in our family history, by the way, just so long as we're talking about stories about Hawaii, they uncovered a distant relative of mine who traveled to Hawaii from Connecticut or New York in the 1800s. And we were talking about that the other day, how that must have been, because you, one, couldn't drive from New York to California in the 1800s, so you had to go by rail to California, hop on a steamship for however many days, and then get to Hawaii. That must have been a very interesting journey. Yeah, easily.
That would have been a great sequel to the Oregon Trail.
Yeah.
The Hawaiian Trail.
Anyway.
That's wild.
Just interesting family history.
Let's see. Let's talk a little bit about Samsung. They are getting $6.4 billion for Texas semiconductor plants from the CHIPS Act, and they are going to use this to up their investment to approximately $45 billion in their Taylor, Texas construction that they are currently undertaking.
So I see now big chips. Let's see. Phoenix, Arizona. We have Texas. There's something in Pennsylvania, right?
Ohio's the other big one.
Okay,
Intel
Ohio.
And Samsung F1's going up there as well.
Yeah. So I still have a tough time understanding why it makes sense to do this in places like Texas and Arizona where water availability is in question, but apparently it does. Labor is a huge piece of this as well, and availability of labor is important to it. I think I've mentioned to you before, Chuck, I have family that lives within 10 miles of the TSMC plant in Phoenix, and I was out there for a business trip recently, saw my father-in-law and his wife, and kind of unrecognizable in terms of the development that's happening there.
That's significant?
just in terms of housing development out there for the presumed workers is just, Phoenix always grows at a crazy pace anyway.
Yeah.
But almost unrecognizable in terms of the new development that was done.
Beneficiary planning and asset protection go hand in hand. And Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699, or you can request it online from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Couple different housing pieces that give some interesting data on the state of today's housing market. First, from the New York Times, a huge number of homeowners have mortgage rates that are too good to give up. And the idea is very simple. Mortgage rates right now are in the 7s. There are a ton of homeowners that have mortgage rates in the 3s, 4s, and 5s. And so if they were to try to move today and still needed a mortgage, which they most likely would, it would be cost prohibitive for them in many cases to do so. The counterpoint to this that I bring up all the time is that, look, yes, you may have a mortgage at that rate, but it doesn't indicate how much you've paid off on that mortgage. And so every year that you go forward, a 30-year fixed-rate mortgage owner pays off anywhere from 2 to 4% of that mortgage. And so at some point, they might look at the math and say, yeah, we're still going to have to take out a mortgage, but because it's going to be half as much as we used to have to, take out in principal, now we can do this, and the net cost to us on a monthly basis won't necessarily change.
Yeah, it is pretty wild. I mean, I don't have data going back to the last interest rate hiking cycle of this in the 1970s, but taking a look at that gap between the average mortgage rate and new rates, you're 3.2% lower on the average existing mortgage compared to new ones that are being issued right now. For the last 2 decades, of course, these two have followed pretty closely because rates have been coming down. As rates came down, people refinanced, brought down the average. That is obviously not happening on the other direction, which helps explain why, in part, the economic pain that many economists have been predicting with higher rates hasn't come to pass because there's a ton of mortgages out there with fixed rate debt right now.
Yeah, and so it's the estimate from the New York Times, and this is actually from data that they analyzed from the Federal Housing Finance Agency, is that 90% of mortgages that are outstanding currently have rates at least 1% below where market rates are today. And further, about 60% of mortgages outstanding are 3% or more below where rates currently are.
Yeah. There's another piece from the Journal related. So boomers bought up the big homes. Now they're not budging, which kind of makes all the sense in the world. If you still have a mortgage, even if you don't, it can make a lot of sense. About 28% of all U.S. homes with 3 or more bedrooms are owned by people between the ages of 60 and 78 who are living by themselves or with another adult. So that excludes multi-generational homes from this example. This is purely 60 to 78 without kids or grandkids living in that home with them. Millennials living with children own just 14% of those, quote, larger homes. This is data according to Redfin analysis of census information. All of these two different stories are resulting in something that I do find intriguing, which is the Pew Research Center found that nearly 1/3 of all Americans between the ages of 25 to 29 now live in multi-generational households. That's about double the rate of the 1970s.
I'm not going to blame boomers for this. Like, it feels like this piece was trying to blame them for not moving. And it's like, no, if you own that home and you're comfortable paying your mortgage, why would you move? So I'm not going to rip boomers for this. I am going to rip the Wall Street Journal for the example that they included, which was of a 33-year-old claiming that it was too expensive to buy a home in Martha's Vineyard where her family lives. It's Martha's Vineyard. Like that'd be like, gee, I can't afford the place in Monaco where my dad lives.
Yeah.
Well, no, you probably
reset those
can't.
expectations.
Like, that's not really reasonable.
Yeah.
You know,
I mean, I do feel for you if you grew up on the island of Martha's Vineyard,
Sure.
And you're not now as an adult able to move there. Like that's tough.
To be fair, Mike, I'll read it and it gets even worse. I'm not gonna say the names just because,
Sure.
even though they say them here. She, her husband, and their 2-year-old son reside in the guest house of her parents' island property. The parents' house is big enough that they have a guest house. This is not really the sympathetic character you're trying, that you think you're building here.
Yeah, the Wall Street Journal had a couple of these today where I'm just not finding them terribly relatable.
You know, if it was like she lives in the gardening shed of her parents' house, okay, now there's something to be said. But when there's a full guest house that you can live in on one of the most exclusive islands in the country,
with, I believe, the most expensive zip code in the country.
The median home price in Dukes County is $1.8 million.
Yeah.
That is not a problem that's representative of the rest of the United States.
What I will say is that I do find it interesting, the increase in multi-generational housing. I'll be very interested to see if this is a short-term trend based on affordability right now over what I will call the last decade, or if this is the start of something longer term.
Yeah.
We are kind of an outlier in terms of the world of multi-generational housing. Parents living with children and providing different types of care. We've been an outlier in the world.
Yeah.
Maybe we're returning to something. I don't know.
Yeah.
Maybe not, though. This could be a very short-term trend purely based on current lack of affordability.
Let's take a quick break here. When we come back, it's time for Stack Roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com escalating.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to ArmstrongAdvisory.com and let us help you secure your financial future. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required and no money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you have for me for Stack Roulette?
Deep fakes and the fact that they're coming for the financial sector. Chuck, I would generally consider to be Fidelity Investments to be when the financial services sector comes up as a whole, I consider them to be one of the prominent forces and leaders in that industry. They happen to be based out of Boston. So regionally, if you work in financial services, you pretty much, anyone that does has spent some time at Fidelity Investments by and large.
They often end up setting policies that much of the industry tends to follow.
Oftentimes, yeah. And so I'm looking at their website right now because I remember that they have a program called Fidelity My Voice, where your voice was your password. And I don't know how this technology works, but they basically enable and enable you to, rather than entering your password when you call on the phone, they just allow you to do, hey, my voice is my password, and allow you to gain some information. So it's not just taking a recording of your voice and they're requiring you to talk on a recording for a period of time and analyzing apparently some data from your voice to treat it almost like a thumbprint, which until very recently I would have considered to be a very secure method. They have a whole page dedicated to it on their website of how it works and how it's secure. I don't see anything addressing the new artificial intelligence concerns that are out there, because from what I have had explained to me, not that I'm any sort of AI expert, with about 15 seconds of recording of my own voice, tools out there are pretty easily able to replicate my voice and make a clip sound like it is coming from me. And I think in all likelihood, the entire financial services industry is getting prepared to deal with this. Now, I have no idea what sort of security Fidelity allows you to even get access to. It might just be like account balances for all I know.
Sure.
I doubt you can wire money to Botswana with your voice as your password. But all of these financial services firms are, I think, probably reeling, trying to figure out, especially the large ones where you're dealing with customers all over the world whom you don't know personally, how are we going to deal with these new technologies that represent a real threat to our business model? And I don't have an answer, because anybody that is big on cybersecurity knows that for the right price, you can pretty much buy anybody's social security number, current address, and date of birth. And so if I can also fake their voice...
What I'm going to say here is going to sound dumb, but I promise it's not. Blockchain solves this.
Yeah.
This has always been my use case for security, blockchain in the real world, which is, hey, you get authenticated by Group X, whoever that is, that like a large consortium of people say, yes, this ID is this person and this is who it belongs to. And not just, some random hacker group. Like, the group can be, again, it's a distributed network. So it can be that the IRS, the Massachusetts Department of Revenue, and the CIA get together and they say, you are Mike Armstrong, you are Chuck Zodda. That ID then lives with you, and you can release the chunk that you need to, which is the authentication piece, to any group that's needed without having to release your actual personal information. And then that can be authenticated via blockchain as well. It's not going to happen because all blockchain is turning into is another number go up or number go down in the Wall Street casino, which is really disappointing to me. But in theory, this is one of the major uses that you could have for blockchain, which is truly authenticating who an individual is.
Yeah. I mean, fortunately, all the scams that I read about, I don't mean to make this fortunately, like they're devastating, but all the scams that I hear about today are pretty basic. It's, convince somebody that you aren't who you say you are and get the person to release their own funds.
Yes.
I'm terrified of a situation where they go attempting to get the funds and successfully get the funds from the financial institution themselves. That's the scary part to me.
We haven't seen
any
of those yet.
Not that I'm aware of.
No.
I'm sure they've existed somewhere, but generally speaking, we have not seen many of those successful type attempts. And those are the ones that really worry me because most of this stuff is in your control. That one's pretty far out of your control.
It is. And every institution that touches money, whether it's a credit card company, a bank, an investment company, is going to have to figure this stuff out because it's
and you can bet they're already thinking about it. Right?
Yes.
I mean,
yes.
Fidelity is not sticking their head in the sand
no,
saying, what are we going to do about AI?
No, they didn't get to where they are by just ignoring things, So, yeah, you've got people, very smart people that are thinking about this. The question is, can they move quickly enough and then, train their staff of, in some of these cases, these companies have hundreds of thousands of employees. Can you accurately train them effectively in a quick period of time? Markets are slightly positive now. We got the Dow up 169 points. S&P's up 18, NASDAQ up 21. So all three major U.S. indices are in the green as we close out the morning. Have a great rest of the day. We'll see you back here tomorrow on the Financial Exchange.